are some live visuals coming in from the historic launch of Chandrayaan-3. There are moments to go. The countdown has begun. Even here in the studio, less than 7 minutes now for India's third lunar mission, Chandrayaan-3. This, as President Narendra Modi has said, this remarkable mission will carry the hopes and dreams of our nation. So we here wish the Indian space mission all the very best as ISRO is on the verge of creating another historic moment.
I can tell you this much, that I think the payload on this is called Bahubali. The rocket is called Bahubali. That much I managed to pick up. But this is going to be quite historic. We're 6 minutes away from launch. So I think we'll go right back in as we're set for liftoff. But for the time being, let's kickstart the show as well. Hello and welcome to another edition of Closing Bell. We're coming to you, of course, as always, live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me is Reema and Nigel. And what we've got, some gains on the screen. But I don't know, Nigel, you want to do a toss on it this time around 19,500. Are we closing above it or not?
Well, it looks like, maybe finally the time has come when 19,500 will be conquered on a closing basis. And, good things take a lot of time, right? As we would know personally as well in life. So maybe this is that one good thing that tested our patience, but maybe today it can conquer that. And I'll tell you what, if we can get past that 18,550 odd mark, the positioning is such that we wouldn't get past that. So if we can get past 18,550, then the next level is 19,550, then 19,700, and then in fact we'll be off to around 20,000 odd. The IT index, that one was expected to give a weakish set of numbers. It's given it, but it seems the street was positioned in that manner. And that's why both yesterday and today, the IT index has been actually the biggest gainer. It's giving you the sense that in the near term, the IT index could have bottomed out. The Nifty Bank, that's the joker for me in the pack for the next 60 minutes or so, because that's underperforming today. If the Nifty Bank can perform, even go up by 0.4% or thereabouts, we'll be well and truly on our way to 19,550. And HDFC Bank's numbers that are due next week, the street will be looking, waiting by for those. Well, two strikes are active today, 19,500 put, 19,400 put, very, very active in today's trading session. So there's put writing that we're seeing after a bit, which is good news. In an uptrending market, you want the two strikes to be active. But really, guys, we're talking about the 19,500 mark, the Nifty Bank at, 45,000 odd. The best part of today's trade actually has been in the broader markets. The mid and the small cap indices, they gave us a bit of a scare yesterday. Bounce back in style. And portfolios today will be feeling much, much better than any of the other days because the breadth of the market is good, more number of stocks advancing than declining, and even smaller cap stocks are doing well.
But for the whole week, the Nifty and the Nifty Mid-Cap Index are ending on an even keel.
Yes.
Which means a gain of about 1%. This is the week-to-date performance. But my IT boys are really performing, and they're, helping the Nifty climb above that 19,500 mark. The top 4 Nifty gainers today are from the IT heavyweights: TCS, Tech Mahindra, Infosys, HCL Tech. In the last 2 trading sessions, the Nifty IT index has gained 5.5%. And remember, the Nifty IT index doesn't have a big weightage. It has about a 15.5% weightage. Even if you take into account the new one who's joined in, LTI Mindtree, it's about 15.5%. Yet, almost 80-90% of the Nifty up move today is coming courtesy the IT biggies, particularly TCS, Infi, and generally the IT boys. Exactly 4 years. Let's move on because there is something historic which is waiting to happen exactly 4 years after its first attempt at a soft landing on the moon failed with Chandrayaan-2. The Indian Space Research Organization is now ready with its second attempt at acing the moon landing in the form of Chandrayaan-3. My colleague Archana Solanki is standing by to explain the significance of this mission for India. Archana, this launch is just moments away. Take it away.
Yes, in a few minutes from now at 2:35 p.m., India will moonwalk itself towards scripting history. ISRO will launch Chandrayaan-3 from Satish Dhawan Space Center in Sriharikota for a soft landing on the moon's surface. Hopes of 1 billion Indians and scientists across the world are on this mission. Let me tell you about India's date with the moon. This is India's third mission to the moon after Chandrayaan-1 and Chandrayaan-2. The module will travel for about a month to reach the moon after its launch today. The landing on the moon is planned for August 23rd to 24th. Basically, it depends on the sunlight there. Once the landing is done, the lander and rover will function for just 1 lunar day, that is 14 Earth days. It's because they can't withstand the extreme cold at night. Another reason why all eyes are on this mission is because Chandrayaan-2 in 2019 had faced challenges when Vikram crashed. So far, only 3 countries have achieved this milestone. They are the US, China, and Russia. It's a significant first for the world because for the first time, a spacecraft is going to soft land on the moon's south pole. So far, all missions have explored the equator. The South Pole is completely unexplored, and scientists are watching this mission with bated breath. Now, why is it taking so long to reach the moon? It's not easy to land there. The average distance between the Earth and the moon is 384,400 kilometers. The question is, why did ISRO choose today? Well, during July, the month of July, the distance between the Earth and moon is relatively closer. And India's biggest and heaviest rocket with a fantastic CV. It's also known as the Fat Boy, is going to launch Chandrayaan-3. It has had past 6 successful missions, and it's going to launch spacecraft into the moon's surface. Well, the 3 main objectives, why are we going to the moon? The 3 main objectives is to do a soft landing on the moon's surface, study the lunar surface, understand the quakes there, and conduct experiments. The data collected from this mission will be very crucial in the future Artemis mission that's planning to land the humans on the moon, and to also understand the presence of ice there. The estimated budget is 615 crore rupees or $75 million. It is much cheaper than Hollywood and Bollywood movies. Remember, ISRO's stellar scientists.
Lift-off normal.
Here we have a majestic lift-off of LBM-3 M4 rocket carrying India's prestigious Chandrayaan-3 spacecraft.
P2 tracking.
प्रज्वलन और सफलतापूर्ण उत्थापन LBM-3 M4 रॉकेट का यह भीमकाय रॉकेट आसमान को चीरते हुए अपनी भयानक दहाड़ से चारों ओर कंपन उत्पन्न कर रहा है, जिसे हम यहाँ महसूस कर सकते हैं, और यही दहाड़ है जो वैज्ञानिकों को रोमांचित करती है। LBM-3 के उत्थापन के साथ ही हमारे अंतरिक्ष यान चंद्रयान-3 की चंद्रमा की यात्रा प्रारंभ हो चुकी है।
As the rocket is soaring through the clear skies, every second moving closer to the accomplishment of the most important milestone in its mission to moon. Every Indian witnessing the launch live is content with the feeling of watching history in the making.
चंद्रमा की सतह पर अपना छाप छोड़ने के लिए चंद्रयान-3 अपने मिशन को पूरा करने निकल चुका है। वर्तमान में दोनों S-200 स्टेप ऑन बूस्टर सामान निष्पादन करते हुए अपनी निर्दिष्ट कक्षा की ओर बढ़ रहे हैं।
The S-200 motors thrusting simultaneously, generating a peak thrust of close to 6,000 kilonewtons in vacuum. They are made of HTPB-based solid propellant. 204.5 tons in each strap-on. Close to 2 tons of propellant being burnt each second.
S-200 स्टेप ऑन बूस्टर्स का कुल प्रज्वलन काल 126 सेकंड का है, और अभी अभी घोषणा की गई L110 स्टेज का भी प्रज्वलन शुरू हो चुका है।
Apart from the strap-ons, the core stage has also commenced its operation. This stage, based on combination
200 stages are separated.
of hypergolic earth storable liquid propellants UH-25 and N2O4. Now the S-200s have been separated.
Well, that's not just a rocket. That's India's ambitions and India's hopes taking flight. The 3rd moon mission from India, and fingers crossed. We're really hoping for success here for the boys, the gentlemen, ladies and gentlemen at ISRO. Perhaps this will take us into that elite club of nations that have managed a soft landing on the moon. Remember, as Archana was also telling us, it's only US, it's Russia, it's China, and we could be joining that club with a successful mission. So this is a moment of immense pride, so much hard work going behind this.
Yeah.
And by the way, this is all indigenous. The lander, the propulsion vehicle, the landing, everything is indigenous. So just the lift off fills your heart with joy and pride. Absolutely.
Yeah, I can feel it. And Surabhi, coming from, I think, the services background, I think so, you could feel it. You got
these goosebumps, right?
Absolutely.
When you see something like this
Yep, and I think the project, the Chandrayaan project itself was announced way back in early 2000 by late Prime Minister Mr. Vajpayee at that point of time, and we'll be waiting by August 23rd, 24th. That's when the soft landing is expected. So, big moment for us here in India. But for the time being, well, let's get back to the markets. How do you position yourself for the final 50 minutes of trade before we get into the weekend? Mitesh Thakkar is with us. Hi, Mitesh, coming to you a little bit late, but historic moment, so we had to cover that. What's your view on the index from here on? Looks like 19,500 is there for the taking. It's just a level, just a number. But your view on the index and also some picks?
Good afternoon, Nigel. I think I would slightly disagree with that. Not just a number. From a trading point of view, it has its own importance. So we are all waiting for that to happen.
Good.
But I think, what is still worrying? Is the fact that the bank nifty is not yet participating. The metals and the IT index are doing very well. So let's see if this time we are able to get past that level. But for the time being, I think at least on the stock specific side, trade with long bias. On the Nifty, we'll take a trade again if we start getting past 19,525 with a 50-odd point kind of a stop. But on the stock side, I have Oracle Finance and IT, as I just mentioned, is a buzzing sector, seeing a lot of stocks giving breakout from trading point of view. So Oracle Finance is a buy with a stop at 39.20 for targets of 4,100. And Tata Chemical is something which is corrected and is now trying to bounce back. Tata Chemical for me is a buy as well. Would recommend a stop at about levels of 977 and look for targets of around 1,010 to begin with.
Okay, so let's talk about the sector which is participating today, and that is IT. The question everyone's asking is that despite a dismal showing in Q1, why are the stocks rallying over the last 2 days? Just to recap, in Q1, HCL Tech, Wipro both had a revenue contraction on a quarter-on-quarter basis. TCS had no growth, flat growth. So by no accounts, these were good set of numbers. In fact, if anything, there were earnings downgrades. So what has led to this exuberance that we're seeing in the stock price? Again, we spoke to a few people in the market, and this may not be the complete comprehensive picture, maybe conjecture, but let me tell you what I've picked up. One, the management commentary has indicated that the demand environment has not worsened. It's not improved, but it's not worsened. It's not gotten into a panic zone. It's not that, it's worsened. I think that in itself is a big takeaway. HCL Tech, for instance, after a weak Q1 is still holding on to its FY24 guidance. Wipro's next quarter's guidance is not as bad as what was feared. The street was fearing the guidance will be -1% to -3%. But the company has given a guidance of -2% to +1%. So it's not your worst case, the most bearish estimate on the street. Another reason is the global factor. The Nasdaq has rallied 3.5% so far this week. And from the March lows, and I'm looking at March lows here because the Nifty IT index hit a 52-week low only in April on the day Infi was reacting to its Q4 numbers. But from March low, which is when the market rally started, the Nifty has gone up 15%, while the IT index is up close to about 7 to 8%. So it's not really, it's participated to a lesser extent. So at a time when the rest of the market may be looking expensive, at least in the case of IT, valuations are similar to what they were, the average of the last 5 years. Things have not gotten overheated after the kind of correction that we've had. And getting back to the global point, how Nasdaq has seen a rally of 3.5%. One, of course, the US economic data still continues to be very, very strong, which fuels hopes that eventually the clients will have the confidence to start spending and discretionary spending will pick up. And also, if we are closer to the end of the US Fed rate hiking cycle, then the valuation support also comes in. The valuation downside gets capped. So those are some factors which could have aided the up move that we're seeing. But we've got
LTI Mindtree as well will be reporting on its numbers, right? On Monday, Rima, what do we expect out here? Another weak set?
Yes, so we're expecting another weak set. In fact, no growth. So absolutely flat on the top line as well for LTI Mindtree. This is something the company had indicated in April itself, that Q1 is going to be subdued. Yet the company in April had said we maintain it's going to be a double-digit year for the company. So whether they hold on to that will be tracked very closely. Secondly, on margins front. Now, margins for LTIMindtree started contracting once the merger took place towards the end of last year, December. So margins fell because there were a lot of integration costs. But margins have now been on an uptrend. In Q3, that's in the December quarter, margins had gone down to 13.9%. They improved to 16.35%, and they're further expected to improve to 16.7%. The company's guidance is that we will very soon get back to the margins that we were trading independently, when both the companies were independently listed. All those integration related costs are out of the way, so 17 to 18%. So profits will be up 7.2%. But the key is going to be that despite a flattish start, a weak start, does the company hold on to its revenue guidance of double digit? If they do that, I think the street will take a fair amount of comfort. But Prakash is with us on the show.
Well, that's right. Prakash is with us. Prakash, hi, good afternoon. We just got a short while before we get into the weekend, but those that are going to the weekend who had IT in their portfolio, they'll be feeling very, very good. I think the street was positioned for a fairly weak set of numbers, and maybe some part of the positioning as well has played its role in this bounce that we're seeing. Your view on the space from here on, how do you approach it?
Good afternoon, Nigel. So, absolutely you're right. The pre-earnings positioning was fairly mild, was tempered. There was not much of excitement in any case, in terms of expecting too much. And in fact, the likes of HCL Tech had already corrected 5-6% a few days before the earnings. And, when we got the earnings, when Rima and I were talking about TCS and then immediately HCL Tech, it was clear that there's a sign of things not worsening further, which means there's some sort of a semblance of bottoming out on the business side. Yeah, and if you look at Wipro and if you look at HCL Tech on a future basis, the next couple of quarters, their deal expectation of the deal wins for the next quarter as well is not bad. It's not that it's reduced from what they had this quarter. So which means that there is some sort of a incremental improvement, although very marginal, that could be expected in the numbers. So the market has also taken cognizance of the fact that valuations are tempered quite a bit. You had Infosys at 1,600-1,700, which was down to 1,100. So there was a significant change in what the market was paying for these stocks. And I think it's a contra bet. Looks like the expectations have been met with in terms of not too much of disappointment. The commentary is not so, negative. And most of the guidance will probably tell you that it's kind of going back to a moderate kind of a growth regime. Of course, this is supposed to be the best quarter for the year, and it's not turned out to be so well. But the subsequent quarters could just kind of cement the view that the bottoming out process, and especially the global markets, is there. The BFSI vertical, whoever is dependent on that, Nigel, will probably still have to face that. But some of the companies which are non-BFSI focused, where they probably will be off the tables much faster. The likes of Cyient, the likes of Sonata. I'm talking about the smaller ones as well. So there is ample headroom for improvement in prices for most of these names, and that's what the market's getting excited. I mean, I haven't seen 4-5% on a TCS or Tech Mahindra HCL on the same day. So there definitely seems to be a pullback on the upside from the results.
Okay, all right. While we were discussing IT, I just want to pull up two stocks, two big underperformers, but both of them have spiked to the high point of the day. Z as well as RBL Bank. Now, both of them moving high and moving on very, very good volumes. For Z, it's a 3-month high that we're seeing on that stock. It spiked to the high point of the day. And on RBL Bank, well, it's the best single day gain in nearly 9 months. The stock is up for the 5th straight session. It's higher in today's trading session. And, it's trading at its highest levels, I think, since November 2021, I think. So a big up move is what we are seeing. Prakash, just catching you off guard here, but these two are moving higher on very, very high volumes. Forget about 19,500. Some of these stocks are doing a thing of their own. Any view on either of them, C or RBL Bank?
So RBL Bank, I haven't tracked in a while. I mean, it lost out of favor of sorts when things were kind of not going too well for them. But on Z, I can tell you, Nigel, there is a very clear binary trade that's emerging. I mean, if things go well, in spite of all those unpredictable events which are flowing in, you could probably see the stock re-rate itself very ferociously. And if things don't go well, you will at least have a limited downside from where it is, because 200 or probably 190 has been the bottom in that sense. There's not much to lose from here on. So so what traders are doing, I think it's more tactical trades that are emerging in Z. But I would, from given the similar situation and what it can kind of translate to, I would look at something like Dish TV. To me, those are optionalities that have much more clarity in everything working out and going. You look at how it's, in the last 6-8 months, it's behaved from those 12-13 levels to almost in the 50% upside. But I still feel there's a lot of balance sheet repair that's not yet captured in the business. The asset value of what they own is something which anybody would want to kind of pay very, very decent compensation for. So there's the ability to monetize that as and when something goes through, and once the NCLT issues are behind them, could probably be a better upside. So I mean, these are high risk, high reward kind of plays. Not a recommendation for long-term stable investors who want to sleep well, but this is for the ones who need that adrenaline rush. So Z features in that. Same is the case with Dish TV.
Okay, got that. Prakash, stay on. We have more questions for you. But right now, we do have to take a very quick break. By the way, in a bit from now, we'll also be joined by Aman Chauhan of Abacus Asset Management. We'll find out how they're looking at the market, how they find current valuations, expectations from earnings, and more. Welcome back. We're still focusing on a couple of buzzing stocks, and mid-caps are actually ruling the roost with the mid-cap index up now almost 1%. One such name that has caught the market's fancy right from the morning is actually JBM Auto. Even now, that stock is up about 12 to 13%. The company has won an order to supply 5,000 electric buses to different entities. We've got Sonia joining in with all of the details. Sonia, so obviously the moment you say electric anything, the market gets super excited. So the stock reaction is understandable, but do give us some more details.
So this is a big opportunity, and it's something that the company had alluded to a couple of months ago when they spoke to us, that they are in talks to receive this 5,000 EV bus order from various state transport undertakings, and this has come through. So they will be supplying electric buses to the state of Gujarat, Haryana, Delhi, Telangana and Orissa. And this is different applications like city buses, staff buses, tarmac coaches, etc. in both the 9 and the 12 meter category will be divided amongst these orders. Now, the important bit is that JBM Auto is already a market leader in the electric vehicle buses category, and they have over 30% market share. They ended the last year with 30%, and the margins that they enjoy in this electric vehicle bus segment is higher than their blended margins. So currently, just to give you the numbers, in FY23 they ended margins with 10%, but they told us earlier that the margins that they get in the EV bus segment is about 15 to 17%. So on a blended basis, they would get about 11-12% margins, which will be higher than what they've done up until now. They're also looking to cross 6,000 crores of top line in FY24. And they're looking to deliver the EV buses in the next 12 to 13 months. They're very bullish on this segment, so they believe that the bus segment will contribute 50% or more of their revenues. We spoke to them earlier about the overall business. We also spoke to them about the possibility of that acquisition of SML Isuzu. Listen into what they had to say.
The margins for the EV bus business is better than the average of JBM Auto. So definitely we'd be in the range of 14 to 15% in terms of the margins for the e-bus business. And we would be looking in totality at JBM Auto level to cross minimum 6,000 crores of top line. Blended margins would be in the range of about 12%, yes, 11 to 12%. But the bus business, e-bus business would be contributing 14 to 15%. We do not like to comment on market speculation. So there is nothing much to add from my side. We always keep evaluating opportunities, but we don't comment on the market speculation.
Okay, that was JBM Auto. Stocks on fire. Prakash, but it's not on fire just today, right? For the context, it's been on fire for the whole year. I think it's up some 200% in this calendar year, even more if you go by the 12-month basis. So the question is that do you still think there's an opportunity here, or is it too late to basically board the bus, should I say?
So, I think they've had a brilliant first mover advantage. And if you recall last year, the AGM and Nishant and the rest of the team talked about the ambitious plans. And they were at just that stage where they piloted a few other states and early adopters to EV, solutions. That was when the stock was about 340, 350 bucks. That was the time to kind of put your weight behind it, right? In hindsight, of course, we all are very perfect. But if you look at what he's talking about, 6,000 crores, a 12% blended margin gives you a 720 crores kind of a profit. And it's already at closer to 18, it's inching towards 18,000 crores market cap. So you would, if you do the math, you'll realize that it's definitely something which is quite expensive. But that's because the scarcity premium that it gets and all these moving parts of the Swaraj Mazda acquisition gives them a whole new set of relationships, distribution, which is what is missing right now. So because they morphed from an ancillary play into a OEM, right? So that transition is already complete. It's now that they will have to scale up with much more moving parts to be added to the moving components to the entire ecosystem that they've created. So it'll take a while. I think it's due for a time consolidation, if you ask me. It might not lose ground given the fancy that it has, but you probably won't make quick money if you get in at these levels for sure.
Okay, all right. Prakash, thanks so much, Prakash, for stopping by and giving us your view on a whole host of stocks. Wishing you a good evening and a good weekend as well ahead. Well, let's move on. Let's get chatting with Aman Chavan, fund manager at Abacus Asset Management, who joins us on the show. Hi, Aman. What a good time it's been, right? For You guys were buying when the markets were not doing much till March 2023, and the last 3.5 months has been absolutely brilliant. Portfolios are looking good. Your clients must be thrilled. What's the strategy from here on? Have you all raised cash in select stocks, or are you all still deploying? What's the strategy from here on?
No, we have not raised cash. So we are holding on to what we own, and the inflows that we keep on getting in, that we are gradually deploying. So it's not that we are deploying that money that comes in overnight. So we are deploying 60-70% to start with, and hopefully over the next 1 to 2 months, we would like the portfolios to be fully deployed for the new clients to come in.
Aman, hi, good afternoon. Good to have you on the show. So tell us, it's really the mid-cap market which is on fire, and people are looking for new ideas. We were just discussing one stock, JBM Auto, with our previous guest. I wanted to get your thoughts on two pockets where there's intense price action that's visible, and whether, just what your opinion is. One is the one is the electronics manufacturing space, EMS. And the other is this whole smart metering business. I mean, look at what's happened to stocks. Today, again, there is GMR Power, Genus. HPL Electric has risen 100% in just 1 month alone. So just want to get your sense on some of these opportunities, whether they look exciting enough to you, and whether there's still enough on the table, or if this is a market, it's a bull market, and things are just moving too fast.
It's a combination of both. So I think this all started with the defense sector, then it moved on to railways. Now it is catching on to the utilities in the power sector, where we're seeing good amount of ordering and tendering coming from the government side. And then the spillover effect of that moves into the smaller companies who were waiting for businesses, and now they're getting those businesses, and order books are swelling up. And combined with that is the market. Last 3 months specifically, mid and small caps have been enrolled. So investor interest is also pretty high. So earlier, if you got an order, there would be a 5% price move. Now it's a 15% price move. So it's a combination of both. But fundamentally speaking, these sectors are definitely looking good, especially because the business momentum has picked up. The private spend, and more so the government spend, is picking up. And that is what is getting reflected. And it's a clear strategy from the government. They want to reduce the import bill. So anything that is imported, they would like to manufacture it in India. And that's a big boost to the domestic manufacturing sector.
Aman, I remember asking you a few, weeks back, perhaps the last time you came or the one before, about the auto sector. And autos had started doing very well. And you said the rally in autos would be a tactical rally, because raw material prices are softened, therefore margins are going to, margins are looking up. But there is a section on the street which believes that after more than 5 years of a downturn, there is a structural up move in auto. Why are you not convinced about that thesis?
There is a move, but as I mentioned last time also, we are pretty positive on the commodities. So if we are positive on the commodities, we feel that it is a better bet to invest directly into commodities than into autos, because a higher commodity price will have a negative margin impact on the auto sector. So while demand is picking up, but at the same time, if you look at different demand, the rural demand in India, there is a slowdown definitely there. You see that in the two-wheeler demand also. So overall, everything is doing well. Economy is doing well. The autos also doing well. But we feel it is relatively better to own a metal stock where we are more bullish than to own an auto stock.
Okay, fair enough. What about IT? In your portfolio, I think IT holding is about 10%. So it's slightly lower than the overall weightage of the IT stocks in the Nifty. So in that sense, you've got an underweight call on IT. But IT's today 4% up move has been dazzling. It's the best one-day move since September of 2020. And Hormuz also tells me that the IT index has added 1 lakh crore to its market capitalization. Do you think IT has made a bottom? And maybe it's a tactical trade, but would you look to up your weightage or take a tactical call on IT?
Yeah, so we were always positive on IT, and we turned neutral a few quarters back, and we continue to maintain that stance. So we like the sector, but near-term growth visibility is there, but it is a decelerating sector for us. That's the reason we have not significantly increasing our share in IT. So we continue to own what we have, and no plans to sell that. We feel this trade is more to do with what has happened in the Nasdaq and the way US markets are rallying. The rub effect of that is visible both in the IT sector as well as the new age stocks that are also buzzing along with this. Definitely, from a growth perspective, I feel 1 and 2Q would be the bottom quarters, and post that things will start to look up. And hence, we continue to own what we have, but not increasing the exposure as of now.
Well, it decreased your weightage on any particular sector, some kind of taking some money off the table in any sector for a rejig, reallocation?
Chemicals, this is where we feel there is a good possibility of a PE de-rating happening, because clearly there are pockets in the chemical sector where both demand as well as margins have taken a hit. And in that scenario, we feel that a 30-40 P might not be sustainable. And hence, we have reduced our exposure in the chemicals. That's, I believe, would be the major sector where we have reduced our exposure.
Okay, so that's your take on some of the chemical names. Aman, so, give us a broader overview. I mean, how are you sizing up the market right now at current levels, 19,500 thereabouts? What's your expectation? I mean, second half of this year, can we keep getting this kind of, momentum on the upside? Do you keep expecting particularly mid caps and small caps to do as well as they have been? Where would you put incremental money?
For us, it's more of so where the valuations are more comfortable, whether it's a large cap or a mid cap. So the incremental money for us is flowing into both large and mid caps. Definitely, what has happened in the last 3 months, I'm not expecting the same thing to get repeated in the next 3 months. November, December is when we have state elections. So while market right now is predominantly focused on central elections where Modi will come for re-election next year, till then they feel it's all well. I feel very soon market will start looking at the state election also, because MP, Chhattisgarh, Rajasthan, these are all 3 big states, will be getting into election mode. And markets would like to take a breather before that, look at how the exit polls, how the trends are, and then take a fresh look. So till that time, for the next few months, I think markets are in healthy shape, post which we expect markets can take a pause ahead of the central elections coming in.
Aman, since you brought it up, I have to ask you this. What is the best election play? Because you've got to have that play now in your portfolio in the run-up to, next year. So I don't know, I mean, home improvement stocks, pipe coming. How do you play the general election and the spends that are expected?
So typically railways, power sector used to be the one, but railways are already done very well. I feel EPC companies, infra companies would do well, because even if there's a spend on an airport or on a road or a civil infra or urban infra, these are the companies that are going to execute that. So that is one segment which is clearly looking good. Valuations are also reasonable. These companies are trading around 14-15 times 1 year forward earnings. Most of the companies have learned from the past cycle that they have to manage their working capital well. So they are keeping a good tight budget as far as the working capital is concerned. So this one sector is definitely what we are gunning on ahead of the elections, and a good proxy to a favorable election outcome.
We leave the conversation here. Thank you very much for joining in. Need to get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We also get you a few BTST calls for the weekend.
Welcome back. Well, 19,550 is here on the Nifty. Well, yesterday we did a U-turn, but today it's almost guaranteed with hardly 22 minutes left for today's trading session. Take averaging, take everything, the 19,500 odd mark finally is going to be conquered on a closing basis. And the reason for that is the IT index that was as is doing well, that's moved to the high point of the day. And the Nifty bank that was underperforming suddenly has put on close to around 100 points. The intraday chart tells you the picture out there. That's the Nifty bank. Just take a look at that. From the red terrain, it moves into the green. The IT index in a form of its own, you're looking as beautiful as ever. Stock, all those stocks doing well. TCS actually has taken that index higher. But as promised, it's the time for our special segment, D-Street Chatter. Nimesh joins us to tell us what he's picking up. Nimesh, finally, 19,500, 19,500. Today, it's there for the taking. I think we are done. I mean, it's going to be good, at least on a closing basis. What else are you picking up?
Well, looks like, Nigel, that's the overall feedback as well. But if you look at this week, it's been largely the week of large caps. Every alternate day, it's basically the large cap, select large cap names which has helped the Nifty to go up and rally hard. Like we saw one day there was Reliance, HDFC Bank, HDFC Twin supported earlier this week, and now the IT is joining the party. So IT index is up more than 4%. Big moves on most of the IT names today. To me, it looks like it's a combination of both short covering as well as fresh buying in the IT names today. In terms of flows, again, it's going to be a mixed day with a positive bias. So that trend continues of buying support from the larger FIs. Some bit of profit booking in sectors like power and insurance. They've done well of late, so some bit of profit booking there. But as I said, even the mid caps have joined the party today. So net a good day for the bulls. And as I said, this rally is getting narrower and narrower, and only the large caps, select large caps, are what helping the Nifty to rally or inch higher with record highs on the Nifty as well.
Nimesh, what about individual stocks? Which ones have you got on your radar today?
Hi, Rimas. In terms of individual names, the first stock on my list is Prestige Estate. For the last 2 days, there's been massive blocks happening. I believe today's block was a clean-out trade for the seller. And in terms of buyers, a couple of domestic funds have been aggressively buying Prestige Estate in the last few days. So that's the first one. The second stock is Hindustan Aeronautics. In a good day, that stock is under pressure on some sell flows as well at FIDs. But again, in HAL, the overall feedback is maybe the street is again fearing of a supply overhang. Remember, in this 1 year itself, the government have done 3 OFSs. So that's a bit of niggling worry as far as HAL is concerned. The third stock is Century Textile. Big move in that stock as well, and on large volumes. I believe the HNI investors are quite active. In fact, one family office also been an aggressive buyer in Century Textile of late. That explains a big move in that stock. And the last one is RBL Bank. A big move in that stock as well, and huge volumes as well. In fact, I was just looking at the volumes for the last 3 days. In the last 3 days itself, nearly 3 crore shares, which is close to 5% of the equity, got marked for delivery. So some real serious buyer has bought into RBL in the last many days. And even in today's trade, it's been huge volume. So again, the chatter is that maybe you'll see some corporate development in RBL Bank very soon. So that's the reason why big move in that stock as well.
Okay, got that. Thank you very much for that, Nimesh. So that's the list for the day, all the chatter that Nimesh has picked up. By the way, look at this market go. I guess with the Chandrayaan-3 taking off, the market's saying, why should we be behind? Let's just bring on the party and rocket ahead, because that's what's happening. It seems finally the bulls will conquer that level of 19,500. And it's looking convincing. We have only 15 minutes to go. And just when you least expect it, IT came out to bat. And now maybe the banks are feeling a little bad. They've not been participating. So they've decided, okay, let's contribute a bit. Because the bank Nifty is now, for what it's worth, is putting on about 0.5%. So this is not a bad looking screen at all. An immense buying. There you go. That's the turnaround. After 3 o'clock, we got a turnaround in the bank index. And therefore, the Nifty is looking very smart with a 150-point gain now. Mitesh is back with us. Mitesh, this was your complaint, right? You were concerned about the banks. I think they've heard you. So tell us now, last 15 minutes, what are you doing with the calls?
Well, that's right. I think, that was a very important concern for me, the banking index not participating. But look at the way IT is kind of, and I would really wouldn't have imagined. But I think the good thing is that the bank Nifty has also turned positive. It's gained about 200 points. So it's added the weight to the momentum of the IT index. So that goes good. So therefore, I think, you can carry on with the long position in the weekend. That's hope, that's what we are doing. So I've got 2 buy calls. Vedanta Limited is a BTST, and the metal index is also doing very well. So Vedanta is a BTST with a stop at about levels of 281 for targets of 294. And Tata Consumer is the other one, which I like. I think after correction is getting into some kind of positive mode. So that's a BTSC with a stop at 845 for targets of 865.
By the way, guys, it's a new record high on the Nifty. The previous high was 19,567, which we just hit yesterday. But then we came off from there. And once again today, in this late hour surge, we've seen the Nifty take that out. So now the new high to keep on your record is 19,568.6. But let's talk about the big boy, HDFC Bank. That will be reporting its Q1 numbers on Monday. Abhishek is here with the key expectation. Abhishek, we've anyway got a sneak peek, right? What they've announced their provisional update. So what's the street expecting?
Well, the street is anticipating the profit growth of the standalone bank on a YOY basis to be the best in last 14 quarters. As you mentioned, the business card is already there. In terms of the merged numbers of SDFC Bank and SDFC Limited, deposits are up 16.2% YOY and about 1.2% sequentially. Advances are up a little more than 13% YOY and about 0.7% sequentially. On a standalone basis, the deposits are up 19.2% YOY and about 1.6% sequentially. The CASA ratio is at 11 quarter low. Advances growth of 0.9% quarter on quarter is perhaps a 26 quarter low in terms of the growth rate. And CD ratio, that is credit to deposit ratio, at 84.5% is perhaps at a 12 quarter low. To watch out for, the net interest margin will be the key factor. It may remain stable or decline marginally as per analyst estimate. Kotak Securities estimates slippage of less than 2% and recoveries to aid in asset quality remaining stable or improve on a sequential basis. Kotak Securities also estimates operating profit growth of 16.5% YOY and down about 4% sequentially. OPEX has been high for SDFC Bank as they have been doing branch expansion, which is eating into OPEX. Credit cost to remain stable or under control and asset quality to remain stable or improve on a sequential basis. SDFC Bank has one of the best asset quality amongst large banks in terms of the private sector space. So our poll of the standalone bank suggests NII growth of 22.8% YOY and about 2.5% sequentially. We are working with a profit growth of 24.3% YOY, which is at a 14-quarter high in terms of the growth rate, while it can decline by 5.1% on a sequential basis. Back to you.
Thank you for that. And as we slip into a break, here is a quick programming note. Our weekend special Editors Roundtable is coming up at 4:30 p.m. And let's get you a sneak preview on what are the themes that we're tackling today. Foreign institutional investors are investing heavily in the Indian stocks, and the amount of inflows into India this year so far has outperformed every other Asian peers. Sonia gets us the detailed analysis.
Inflows into small cap equity schemes are at a record high in June. Nimesh takes us through the data.
Indicators suggest the broader markets could pause for breath. Will some consolidation in the broader markets be healthy? Nigel gets us the data.
We will also discuss more market themes with Pankaj Tibrewal of Kotak Mutual Funds. So don't forget to tune in. Editors Roundtable live at 4:30 p.m. today.
Welcome back. Minutes left. Let's get in some, stock calls. Independent market expert Ambrish Palika is with us now. Ambrish, I'm straight away going to get to your call. The stock that you like, it's Pidilite. Just earlier this week, we had one brokerage, I think Citi. It was a double downgrade by them. They pushed the target price all the way down to 2,200. And their reason was that valuations at 70 times is just extremely uncomfortable. How would you react? How do you expect the stock to go up when it's already trading at such high valuation multiples and the street is expecting a good earnings performance and therefore maybe priced in?
No, you look at the last decade or more. I mean, Pidilite has always been expensive, just like Asian Paints. I mean, like the P, has been high all through. And the last 18 months, 24 months were a bit difficult for Pidilite because of the cost of raw materials, which was quite high. That, in fact, has started coming down. So that's one of the big positives. And look at the brands. I think one of the best-known brands, Fevicol, plus they have a number of other major brands in the basket like Fevikwik, M-Seal, Fevikwik. All these brands are leaders in that specific vertical. Look at the operations. It's in about 8 countries. They have manufacturing plants, which is about 33 manufacturing plants, 35 outsourced manufacturers, 850 products, and they export to more than 80 countries. About 81% of the business is B2C, where the margins are higher. 19% is B2B. And if you look at the last 2 years, like I said, growth has been decent, 27% growth per annum. But then they suffered because of the raw material prices and margins came down from 23% to 17%. This is basically because the major raw material, 25% of the raw material is VAM, vinyl acetate monomer, which was at about $2,600 last year. That's come down to $1,100 per ton now. And if you look at the spot prices, it's still below 1,000. So because of this, I expect the EBITDA margins to again move back to those 24-25% in FY24. And Q1 should be a surprise. And if that happens, clearly I think you'll see the stock moving up. And again, I'm not saying it'll move up majorly from here, but I'm looking at a price of about 3080 with an expectation of 44 rupees EPS in FY25. And rightly said, it should be about 70 times.
Okay. Hi, Ambrish. Good afternoon. Well, just a few minutes to go before market close. But, Ambrish, in the last 1 hour or so, we were talking about 19,500. The market said, forget about 19,500. We're on our way to 19,600. So maybe by the time we wind up, we'll hit that level. And the reason is the Nifty Bank. We mentioned this at the start of the show, that if the Nifty needs to get that booster shot, the Nifty Bank that was down 100 points needs to recover. It's recovered 350 points, I think, in the last 60 to around 80 minutes or so. Explains why we have bounced back. Ambrish, I wanted to ask you about a couple of stocks. So many stocks are buzzing in the broader markets, but Sunteck Realty, that was the big underperformer from the real estate space. I think in this month, it's up more than 25%. Any view on this one or any other stock from the real estate space that you like?
No, in fact, real estate overall, I've been bullish. Especially the affordable housing space where the actual demand is there at the ground level. And again, I expect that possibly by January, February 24, we will have the interest rates starting to come down. And I think that will be a big booster. And at the same time, we have seen the prices of the real estate, the property prices have been moving up. They moved up about 7-8% last year. And typically, whenever the prices start moving up, the demand actually increases. It doesn't reduce because you have a lot of fence sitters who have not been deciding on buying a house or a flat. They jump in to buy when the prices move up. So clearly, I expect the demand to continue at least in the foreseeable future, and especially in the affordable housing space. So Sunteck has been a good mover, but there is one more in the same space called Arihant Superstructures, which again has underperformed a bit in the last 4 to 5 months. I think that's one stock which can perform extremely well because they have about 95% of the portfolio is affordable housing. And we should see a revenue of about 7,000 to 8,000 crores cumulative over the next 6-7 years. Look at the current revenue, which is about 400-500 crores. From here, you'll see about 7,000 crores in a period of 6 to 7 years. So that's a huge jump. I think this could be a multi-bagger.
There is a stock, Aptus Value, which has suddenly shot up. It's up close to about 8.5%. Aptus Value Housing Finance. Just pull up that stock. It's crossed its 200-day moving average with the up move. It's moved up on very large volumes. And I think over the last couple of days as well, the stock has seen some buying. Week to date, or I think at least this month, the stock has been seen a gain of close to about 15%. That's Aptus Value Housing. Pretty big up move. And in the last few days too, it's shot up a fair bit.
That's one stock. I mean, I was just looking at the others. Today, the list of mid-cap winners is a really long one once again. Of course, a lot of your IT names, the rub-off has already started traveling through on stocks like Sonata Software, Mastech, and a couple of others. But even the others, I mean, look at RBL Bank, NCC, it's just a long list. Amrish, we'll leave it there for this afternoon. Thank you very much for joining in. Always a pleasure having you on our shows. But it is time to start dialing down to the end of the week, the end of the trading action, and we are ending it off in style. Fresh all-time highs on the Nifty, 19,587 and counting. So the Nifty took its time, 7 days, but finally it took off for the moon, if I could say. Maybe it was the Chandrayaan mission that kind of powered up the bulls. But this is a very good-looking screen from the bulls' perspective because it's got momentum riding behind it. IT, of course, led from the front. We haven't seen these kind of levels, closing levels in a while. Look at big stocks. The top 6 stocks on the Nifty are all, Nifty gainers I'm saying, are all IT stocks. And TCS leads the way with a gain of a hefty 5%. There's Infosys at 4.5%, Tech Mahindra 4.5%, LTI Mindtree 4%, HCL Tech, and even Wipro. Whatever the companies have said, whatever the Q1 numbers have been, the market is looking well beyond. Right now the bulls are prevailing, and that's been the one big sector. Banks decided to finally participate. That was the problem area for the market, but things changed 3 o'clock onwards. And the Bank Nifty is also ending with a gain of about 0.5%. We had some more names like Divi's and Nestle, which did well, even Cipla for that matter from the pharma space. So not a bad session. Britannia. So it's a very wide-ranging rally. Reliance was a fence-sitter, but despite that, I think the heavy lifting that IT has done, it more than made up for the fact that Reliance had a sluggish session. Other than that, on the losing side, actually, you have a few bank stocks, SBI, IndusInd Bank, they were still dragging their feet, but not much. I mean, then there's an M&M and a Maruti. Today was a better day for two-wheelers, actually. The two-wheeler stocks have done well. The four-wheelers, I think maybe people are riding out monsoons. I'm not sure what the deal is. I know for a fact one rider who's here with us in the studios. No. But yeah, two-wheeler stocks doing largely better than the
no riding in monsoon for this rider. But more stocks, Rima?
Yes, the mid-cap index also took off. So the mid-cap index ends with a gain of more than 1%. And it's IT all the way in the broader markets too. Emphasis 8% higher. Intellect Design Arena, L&T Technology, Birlasoft, First. List is very long and pretty much covers all the mid-cap IT names. RBL Bank, fresh 52-week high. Z Entertainment, very strong in trade on very large volumes. JBM Auto gets that 5,000 EV bus boost, and GMR Power gets the smart meter boost.
Okay, well, we'll have to count down then and wind down on the trading action for the day itself. But you stay with us. Let's slip into a short break. On the other side, our Friday special, Smart Money, comes up next. You don't want to miss this.